Hey everyone, the numbers are in for the Panama City Beach housing market for the first quarter of 2022. I wanted to dig into the data to see not only how hot this market really is, but to see what we think prices may do going forward. I'm Craig Duran with the Duran Group at Berkshire Hathaway HomeServices. And again, I want to dig into the data today to somehow quantify just how hot really are we. Let's look at some real numbers. For those of you who have seen any of these videos, maybe you subscribe to the YouTube channel or you get any of our other market updates, you know I'm a big fan of this chart. I haven't explained it in depth in a while, so I'm gonna, for those of you who have seen the explanation before, maybe just fast forward on the video. But for those of you who haven't, let me give it to you now. The first thing to pay attention to here is this red line. The red line represents the number of homes that are for sale at any given point. We're starting here at the beginning of the pandemic. We're picking up right in April of 2020, so about a month after it started. And what happened, you can see pretty simply, we had fewer and fewer and fewer homes available to buy all the way down until April or May of 2021. So for a year, if you were trying to buy a house and you couldn't find something, or you lost out in a multiple offer situation and you turned around to keep trying to buy next month, you had fewer choices. And the next month it was fewer choices again. Here in May, June, July, August, we actually started to see supply move back the other way and thought that maybe this kind of really hot housing market was going to taper off a little bit. But look at what's happened since then. Since August of last year to now, we've now, again, month over month, buyers have fewer and fewer choices. It's hard to find anything to buy. And we're now at our lowest supply levels that we've seen in this whole entire 2-year period. Months of inventory here is a really important number to understand. For those of you who don't know this or haven't heard my explanation on it before, months of inventory comes from the idea of really just analyzing the process. Traditionally, 6 months of inventory would represent a neutral market. And the idea of that is pretty simple. Someone's thinking about selling a house, they call the real estate office. They meet, yes, hire an agent to sell the house. Marketing starts, showings after that, negotiating contracts, get to a contract, close that contract, 30 or 45 days to close. So that whole process from initially deciding to put something up for sale all the way through marketing, showings, contract negotiations, closing would take 6 months in a normal market. If things are taking longer than that, 7, 8 months, 9 months, 10 months to sell houses, then obviously it's a slower market. That's where you start to hear about buyer market territory. That's also when you start to see prices come down a little bit. Just the opposite, when we see less than 6 months of inventory, 5 months, 4 months, things are happening faster, right? Something's happening faster in this process. Either contracts are being written sooner, closings are happening faster, whatever is going on, things are happening faster. And when you look at a number like this, think about that. We've been hovering here at, let's start just this quarter, 1.47, 1.45, 1.13 months of inventory. Theoretically, that means that we'll sell out of every house that's for sale in Panama City Beach in 1.13 months. So just over a month. Now think about this for a minute. On average, it takes about 30, 45 days for a loan to process. The 1.13 months. So the average right now, this isn't even the hottest of the market. The average right now is that a house will go up for sale and close in about the amount of time it takes the closing process anyway. Homes aren't lasting. I know this isn't like great news, dramatic news for anybody, but sit and think about that for a second. I mean, on average, houses just aren't staying on the market. I know we've heard this, but I want to give you some perspective and some real numbers to go into some of this other stuff. To compare year over year to 2021 first quarter to 2022, what's happening? A couple of things. We have 22% fewer homes available for sale right now than we did in the first quarter of 2021. And the first quarter of 2021, if you remember, was already a very hot real estate market. So we even have 22% fewer houses available. The number of new homes coming up for sale, and part of this is we'll talk about in a second. Well, let me give you the number. We're down 8%. So the number of new homes for sale, not new construction, but the number of new listings coming to the market was down 8%, almost 10% in the first quarter, meaning fewer people are putting up their homes. And there are two things happening here. Fewer people are putting up their homes, and builders are still having a hard time getting things to market. In Panama City Beach, there's a couple things specifically. Breakfast Point, where a lot of new construction was happening in 2022, is in between sort of phases on what's available for buyers to buy. The new phase isn't quite available yet for them to start construction. They've already sold a lot of what's being constructed now. Some other neighborhoods like Ward Creek are not online yet. So there's a little bit of a lull in new construction happening first quarter, which accounts a little bit for that 8% drop in new homes coming to the market. Something else to think about, I don't remember the exact statistic, but there's a huge number of the population, a huge percentage of the population that has an interest rate on their mortgage less than 4%. So there's really no pressure to get out and get into anything else. And we wouldn't expect to see that change anytime soon unless interest rates move up. Something else from the first quarter, we have 17% fewer homes went under contract. Probably not surprising. If you have 22% fewer homes for sale, you're probably going to write fewer contracts. So we were down on the 17% fewer contracts written, but we only sold 2% fewer in the first quarter overall. And the amazing thing about it is there was actually, when you look at the dollars, we actually sold 21% more volume because of the raise, the increase in prices. And look at that. The average sales price for Panama City Beach first quarter of 2022 was up 24% over 2021. In 1 year, the median sales price was up 27% in 1 year. First quarter, 2022, first quarter 2021. It's an incredible appreciation rate, and something that we're expecting is going to decrease. Let me show you a couple of national projections. This one, home price forecast for 2022. The first column, the average of all the forecasts is 6.1%. CoreLogic's a company that pulls a lot of data together for the real estate market or real estate industry, is really aggressive and bullish, saying, hey, it's going to be a 9.6% price increase this year. Fannie Mae, 7.6%. HPES, which I need to check and see what that is, 6.3%. Freddie Mac, 6.2%. MBA, 5.1%. NAR, that's the National Association of Realtors, is estimating 5.1%, which I think is a little bit interesting because in a lot of the home price forecasts, a lot of times the real estate industry, the National Association of Realtors, those of us selling houses, are usually the ones more on the bullish side. It's interesting to me to see that the NAR forecast is a little bit more tepid than that. And then Zelman and Associates, really great, respected company that specifically tracks the housing market, is estimating only 3% increase in home prices for 2022. When you look at, disregard the title for this, this is coming from a real estate agent kind of marketing content creator. And so part of the sell here is that, hey, there isn't a housing bubble coming. I don't think I would ever say that. I don't have a crystal ball, but I do think there are some things to pay attention to that are different than the last time. If you look at the 4 years of the housing, they're calling it the housing crash from 2007 to 2010, back to our years of inventory or months of inventory number, we were hovering at 9.6 months of inventory, 9.4, 7.3, 8.5 months of inventory. Right now, in the last 4 years, we've gone from 3.7 to 3 to 1.9 to 1.8. And where we are right now in our local market that I just showed you, we're at 1.13 months of inventory. So a lot less supply for the demand that's out there. One last point to show you before I pull this off. I'm going to put this here and you can just pause the video if you really want to get into it. I'm not going to get into each line, but this is showing you what happened in the first quarter only in Panama City Beach and the price ranges of where things are happening and the sizes of where things are happening. And so single family, a couple of things: unit sales by financing type. 68 of the 296 deals, I think that's about 22%, were cash sales. Conventional financing still leads the way. I think 184 of 296 was like 60% or so. FHA financing, a little bit lower threshold on down payment. You can get away with a 3.5% down payment on an FHA deal. There were only eight of the 296 sales were FHA financing. There are a lot of reasons for that. Sellers in a lot of cases are less inclined to take FHA deals or offers, especially in so many situations. There are multiple offer situations, and conventional and cash offers are competing with FHA. It's very difficult if you're an FHA buyer right now. Those of you who are trying to do that know that very well. VA buyers account for 28 of the 296 closings in the first quarter. Similar situation there. VA buyers are very well qualified, very excellent buyers. Sometimes it's difficult for them to compete with conventional and cash financing. On average, this is just a chart on residential, even though I've got condos listed here. I only pulled the residential numbers. It was taking on average 164 of the 296 sales were closed in 30 days. 42 of those were done in 31 to 60 days. And then you can see the numbers from there. If you really want to dig in this, spend some time here to see where more of the sales are happening. You can look by size, and you can look by price range. So you can see, for example, 3-bedroom homes, there was only one that sold in the first quarter under $200,000. There was only one other one that sold under $250,000. There were only 9 total that sold under $300,000 in Panama City Beach. 49 of them sold between $300,000 and $400,000. 54 of them sold between $400,000 and $500,000. And believe it or not, 43 of them sold at over $500,000. It's a 3-bedroom house. I don't have square footages on this, but you get the idea. If you're looking for a 4-bedroom house in Panama City Beach, you had to be at least in the 300s. Between 300 and 400, there were 9 sales. 400 to 500, there were 18 sales, and the majority of a 4-bedroom house now in Panama City Beach, for the most part, is going to cost you over $500,000. There were 69 sales there. So a couple things to keep in mind. Going back to this one, I think is the most interesting for those of you who are looking forward. Home price forecasts averaging 6.1%. Some of the more bearish projections are still appreciating. So I've seen this chart a few years ago where we saw that estimates of prices dropping 2% or 5% or whatever they might be. So even the most pessimistic of those groups, the National Association of Realtors and Zelman and Associates, are still projecting 5.1% or 3% appreciation in 2022. But think about this for a second. Compare that to what's just happened. Here locally, we were at 27%. I think Florida was 25 or 27% appreciation. So the rate of appreciation is slowing down. Not surprising. It probably needed to after a year like that. What we're watching for in the housing market is at some point, when do investors who are driving so much of this market start to see that the prices they're paying for things now, since prices have gotten so high, will the rents support that? And will the returns on those investments be satisfactory enough? Will investors be happy enough with those returns? Or are they going to start looking elsewhere? There are other asset classes where investors all of a sudden get off of housing. And the reason this is so important, and I was on listening to a podcast yesterday. There's one group that's buying, that their goal right now is to buy 75 homes a month in Phoenix. Another one is 75 homes a month in Denver. Another one is 75 homes a month in Austin. You have a lot of that big money hedge fund type investment in the housing market still, which is part of what's contributing to tight supply nationally. A little bit less of that here locally, but it's a very real thing. So as supply comes back and builders continue to build more supply, do investors, with the prices they're going to have to continue to pay, will they be satisfied with their returns? Will they be able to escalate rents as much as they're moving up in pricing? I listened to actually Zelman and Associates. I was listening to a little bit of what they had to say yesterday. And at some point, you can only increase rents so much. The people who are paying money for rent, even with wage increases, that's not an elastic thing. That's going to have to stop at some point, which at some point means that pricing will have to slow down. And if at some point those bulk of investors decide that they're looking at another asset class, stocks or what have you, and you have that amount of money pull out of the housing market, you could see some things change a little bit. But for now, for the rest of this year, still a lot of the different experts are still very bullish on price appreciation, although it's not quite as much as we've seen in the last 12 months. So I know that's a lot of data. 16 minutes of data, which we deal with all the time, is kind of a lot, but I wanted to give you some real numbers. I know a lot of times I'm going into specific communities and just telling you what happened there, but I wanted to give you some of the real numbers and why what we've seen, give you some things that were tangible, and also some reasoning behind what we think the market will be doing through the rest of the year. It'll be interesting to see how much the spring market accounts for that. We know that between now and probably June or July, most of the activity will happen for 2022. So it'll be interesting to see what happens there. Again, a lot of this, we're putting a lot of this out on our once per week email. If you're not getting our Friday morning coffee at the beach email, let me know, shoot me a text or an email. I'll get you signed up for that. If you're not subscribing to our YouTube channel, we're making a big press this year to get more information out as we anticipate market shifts at some point. We want to make sure that you're current with those kinds of things. So check out our YouTube channel and subscribe there. Hope we found this helpful. For you data nerds are probably the only ones hanging on at this point. So again, I'm Craig Duran with the Duran Group at Berkshire Hathaway Home Services. Thanks for watching.